It goes without saying that the real estate market is still tough to break into today, but there is finally a little light at the end of the tunnel. In some markets in the US, we are finally seeing inventory stabilize, sort of. With higher inventory can mean higher competition. So I'm going to cover what's going on in my local market and how you can apply that to your local market as well. Hi there, my name is Mindy Jensen, and I'm the host of the BiggerPockets Money Podcast. I'm also a real estate agent in the state of Colorado. Let's talk about the state of the market. But before we do that, let's hear about today's sponsor. One of the biggest issues a real estate investor faces is finding a competent tax professional who really understands all the nuances of the real estate tax code. Enter BiggerPockets, or rather, the BiggerPockets Tax Finder. What am I talking about? This is a resource that helps investors quickly find investor-friendly tax pros, accountants, and financial planners. And why am I so excited about it? Because I have seen so many people asking questions because of something their non-real estate focused tax professional told them, and it's usually dead wrong information. Most investors face the challenge of finding trusted, investor-friendly partners who understand real estate investing. We solved this, and we made it really easy. This is how it works. Go to biggerpockets.com/taxfinder. Choose tax and accounting or financial planning. Tell us your criteria and see instant results. Easily find trusted tax and financial planning experts for real estate investors. You'll get investor-friendly experts and peace of mind from peer ratings, reviews, and proof of experience. Okay, now let's get into it. I noticed inventory improving greatly when I had a client consultation recently. Sub $750,000 houses in Longmont, which is the area I serve. During the hot spring of 2022, there were like 10 or 15 listings on the market. Yesterday, I pulled up a listing of 70. And while this is a huge jump, it's still about half of what a normal balanced market would look like in my area. Why? Because people simply aren't selling their houses right now unless they have to, thanks to our current high interest rates. But this isn't news. And add to that buyers who are leery about those same rates, you have less people in the market trying to buy those houses. So those houses are going to stay on the market a little bit longer. More houses available for purchase might seem like a good thing, but it's kind of a mixed bag. Inventory is up, but supply is low and getting lower every year. I know you're saying, Mindy, inventory and supply are the same thing. Yes and no. Inventory means the amount of houses available for sale at a given time. Supply means all of the houses in the country. And right now, we're seeing a supply shortage of anywhere between 4 million and almost 8 million housing units, depending on who you're listening to. However, what I'm seeing is impatient sellers, or those who can't afford to wait for the house to sell. So they're starting to drop their prices. This is an anomaly with regards to the law of supply and demand, or the normal laws of supply and demand, which say that when supply is low, prices go up, usually, but human behavior is weird. So our low supply, coupled with higher than we've been used to seeing rates, has prices stabilizing or even dropping in my location. Your location might be a little bit different. A quick search shows 0 houses that were listed during the month of December still on the market. Same with November. There's one sad looking house that was listed in October that's still for sale with very bad pictures in a suboptimal location. Unless they start dropping the price, that house is going to sit forever. There's one weird listing in September, again, super weird house. 3 that were listed in August are still on the market. 2 very weird houses and one that I really can't find a reason why it's not selling yet. What this tells me is that houses are selling. It's not a buyer's market, even though it's far less frenetic than spring of 2022. We still have a seller's market. And with supply being low, even with inventory being higher, I don't see this market balancing out or even turning into a buyer's market anytime soon. So am I saying that now is a bad time to buy? Nope. Not at all. In fact, the opposite. Rates are high and people aren't buying right now. At least not everybody who wants to buy is able to buy right now. What do you think will happen to the market if rates start dropping? I'm going to tell you, all the people sitting on the sidelines are going to dive back in. And there's a lot of them. Remember spring of 2022? It's going to be just like that all over again. Multiple offers on every property, all cash, no contingencies, no inspection, yada, yada, yada. In fact, 2024 might be one of the best times to buy for the foreseeable future. Sure, rates are high right now, and you should absolutely be able to make the mortgage payments on the property that you're buying with the expectation that rates won't drop. But should they go down, you'll be the only person trying to get a loan on that house, as opposed to that multiple offer garbage that we had in 2022. And you're probably saying, great, Mindy, that's fine for your market, but my market is different. Is it? Do you know that? Do you have a knowledgeable agent who is in the market right now, who has a grasp of what's going on locally? If not, that's a huge detriment to you and your ability to find a great deal. There are great deals out there. There are great deals in any market. Right now is a great time to buy real estate because of the combination of impatient sellers, the timidness of other buyers, and the impending rate cuts. Now, hold on. When I asked about rate cuts in 2024, my magic 8-ball said, outlook not so good. When you are buying real estate with traditional financing, you should have the mindset that rates aren't going down anytime soon. I mean, not only did my 8-ball tell me this, also the Fed has indicated that rate cuts are not coming in 2024. And this supply shortage is not going away anytime soon. It takes months or even years to get approval for new buildings, which pushes balancing out the market down the road pretty far. In fact, I would be shocked if our supply problem was fixed by the end of the decade. It's going to continue to get worse. And by worse, I mean going back to the traditional laws of supply and demand, where demand increases and prices go up. I see a relatively short window for calm, thoughtful purchases before the market really heats up again. There you have it. Thank you so much for your time. I am Mindy Jensen, and if you found this video helpful, please click the thumbs up. And don't forget to subscribe to the BiggerPockets channel to get more videos just like this. If you have any questions about how you can get started investing in this market, leave them below. Thank you for watching.